But in the end, the equity markets will sail unabashedly across the seas, not giving a crap about the storm that is around the corner. I should probably edit that out. And the clouds that surround them. The UK, on the other hand, oh my gosh, don't even go there. Hi guys, thank you so much for joining me in another video. In this video, I want to talk about whether the rally is over. What does she even mean, rally? The financial news is so exciting at the moment. There's a lot to consider each week when I'm thinking about articles and what I'm reading and what I want to talk to you guys about. And I'm overwhelmed with choice. The rise of the day trader, the increased volatility it brings to the market, the US elections, whether he'll make it to another presidential term. Is Bitcoin the new hedge against the world's economies? It is just crazy out there. For more Fifi rants, you can check out my video down below in the description box, where it was probably my most divisive video actually, where I was talking about Mr. Buffett. And I experienced my first proper dislike on a video. So I decided what I wanted to talk about today is what are the markets like now? Let's have a look at the S&P 500 for a second. It's really interesting because the markets are showing at the moment recovery back to the start of the year. Just check that graph. And for the last month, we've been in a bit of a mini bull, really. The UK, on the other hand, oh my gosh, don't even go there. Well, we are now down 20% from the start of the year. And that's, I might as well put another plug in for another video here. If you don't know about home bias, go watch my video for home bias and how to get away from it. So when you see news like this, you have to almost pinch yourself or hold your tummy so you don't be sick. And you need to ask yourself, are markets really rational like economists are banging on about? We're told time and time again that professional money managers, investment banks, institutions crunch data to ensure that the market is valued fairly. Everything is supposed to be priced in. We as petty individuals can't beat the market. It's a perfectly oiled machine. So isn't it better to be part of that machine rather than to be the one trying to beat the machine? It's something I still stand by, to be in the market rather than be on the sidelines. Don't be a Tesla or a Nikola. Be there in the middle. It's herd mentality really when you think about it. Herd survival. If you're being chased by a lion, you're going to be in the middle of the pack, not on the edges of the pack. Last week, the S&P hit January the 1st, 2020 levels. Now, January the 1st seems like a glass ceiling, so we're having a tough time buying and selling. With a year that has had just so much gone wrong, traders are finding it so much more difficult to support prices that are higher than where they started at. And that's quite fascinating when you think about it. So what about that V-shaped recovery then? Well, when we peel away the layers, some commentary is indicating that the market will recover a lot quicker than we expect. And a lot more companies will be reporting an increase in activity since March. That is really important because it's setting expectations and also showing investors that the worst of the pandemic is already behind us. There is also general consensus from the analysts saying that the response has been more measured, and it shows that the segments and pockets of industry is not doing so well, particularly small caps and cyclicals, which would typically be doing a lot better than they are. One of the most fascinating things I think about a V-shaped recovery is people expect it to V up pretty quickly, but on average it takes 18 months for a V-shaped recovery to run its course. And also 18 months for the economies to return back to normal. 18 months is a long time. And isn't that normal anyway after a recession? And technically a recession can't be declared unless it's been going on for at least 2 quarters. When we do sprinkle a few facts, research shows that a recession typically lasts 15 months, and it takes about 2.8 years from economies to recover from a 20% drop. And that is purely based on the 8 bear market corrections that we've experienced since 1926, where there were drops greater than 20%. And ultimately, the length of the recovery has been determined by the size of the drop. And these have varied from between 21% to 48%. But the point is, they have always recovered. So based on the facts, what have we learned about market recovery? Everyone, and the media included, seem to be saying that this time is different. But what have we learned from the facts? It's pretty much textbook. In the great financial crisis of 2008, it took approximately 18 months for the economies to recover. That's 5 quarters. And this time we're looking at similar timescales. Granted, the market has been a lot more exuberant and exciting, and we don't even know what's going to happen if there's a second lockdown. But naturally, we have to play the cards that we're dealt, right? Just park that thought on the side for a second. No matter what, the markets will always decline. And it will happen time and time again, no matter what people do or say. And no matter what scaremongering is out there. The markets always follow a very similar pattern. The question is, where is the next shock going to come from? Aside from a Walking Dead kind of situation, I really don't want to think about it. The key macro indicators over the last 2 months have been very positive. US employment is improving, Asian economic indicators are positive, and stock analysts are expecting profits to jump by 28% next year. Where is this bullishness even coming from? Well, it's a combination of the government's response and the high savings rate that is expected to trigger a huge boom in spending. Now, can you imagine? But what are the consequences of this in the long term? With all that optimism, we do need to remember and consider the other side. The summer is great, but it will end and winter will come. Winter is coming, and we don't know whether that will bring about another second wave. Likewise, the numbers and predictions are just a veneer. There are deep underlying economic hardships, and will society even be accepting of a second lockdown? And likewise, the government debt will need to be paid back eventually. I can't get through this without actually mentioning US politics. Whether you love him or you hate him, the US president's response has been quite poor, and whether he will get re-elected for another term is the question. Though we do know he likes a challenge, and it will be a blow to international trade. It will be like a saber rattling through the world's markets, and it's most likely to have a negative impact on the markets. But in the end, the equity markets will sail unabashedly across the seas, not giving a crap about the storm that is around the corner. I should probably edit that out. The clouds that surround them. But there you have it. Let me know your thoughts on that one. That was just my summary of what I think the markets are up to now, and let me know your thoughts down there in the comments below. Hit the thumbs up and like button, and subscribe if you haven't already. I'm a new channel and all that jazz. But until next time, cheers guys, bye.